Analyzing Global Arena Holding, Inc. GAHI. Authors and intent. Written by opportunistic management to pivot from a failed financial services firm into a political infrastructure play to attract speculative capital during election cycles. What they are hiding. Severe instability. They are a holding company of failures. Dormant LLCs. Closed energy groups. They are heavily reliant on a single acquisition. And are desperately chasing EAC certification they cannot yet afford. Stock outcome predictions. 1 month. Volatile, flat. 3 months. Bearish. 1 year. High risk of dilution or collapse. Linguistic mapping reveals. Blockchain buzzwords plus critical infrastructure equals speculative pump. Killer use case. Niche municipal election management for small-to-scale political parties and unions. Socioeconomic wealth transfer. The rich. Early seed investors exit via hype cycles. The middle class. Retail traders lose capital to dilution. The poor. Zero impact or relevant. Analyzing Cardinal Health Inc. Authors and intent. Written by institutional lawyers and C-suite executives to mask margin compression and goodwill. Impairments behind massive top-to-line revenue growth. What they are hiding. Goodwill impairment of $184 million suggests they overpaid for acquisitions. The moderating GLP-1 demand is a warning that the weight-to-loss drug gold rush is peaking. Stock outcome predictions. 1 month. Stable. 3 months. Slightly bullish. 1 year. Moderate growth driven by MSO consolidation. Linguistic mapping reveals. Non-to-GAAP adjustments plus strategic acquisitions equals margin smoothing. Killer use case. Vertical integration of specialty physician practices. MSO. To control the drug distribution pipeline. Socioeconomic wealth transfer. The rich. Institutional shareholders capture dividends and buybacks. The middle class. Increased healthcare costs via consolidated MSO pricing. The poor. Limited access to capped-to-price drugs. Analyzing GPO Plus. Inc. GPOX. Authors and intent. Written by a small-to-cap promoter to rebrand a ghost to writing business into a tech-to-driven distribution giant to lure OTC speculators. What they are hiding. Extreme fragility. Paying rent in common shares is a massive red flag for insolvency. They are recruiting because they lack the scale they claim. Stock outcome predictions. 1 month. Speculative spike. 3 months. Sharp decline. 1 year. Likely delisting or bankruptcy. Linguistic mapping reveals. Pioneering plus groundbreaking plus prism plus equals low to float pump. Killer use case. Last to mile distribution for fragmented convenience store inventory. Socioeconomic wealth transfer. The rich. Market makers profiting from volatility. The middle class. Small investors trapped in penny stock traps. The poor. No impact. Macro pattern analysis. The sample reveals a dichotomy between institutional masking, Cardinal Health, and speculative fabricating. GAHI. GPOX. The smaller firms use high-to-frequency buzzwords. Blockchain. DSD. Critical infrastructure. To create a veneer of scalability while operating on shoestring budgets evidenced by paying rent in shares. Meanwhile, the large-to-cap firm uses non-to-GAAP metrics to hide the decay of overvalued assets. Psychologically, all three are selling a future state to distract from a precarious present. Leveraging the fear of missing out, FOMO, on the next big pivot.